Good morning all, hope you're doing okay. Quick bulletin for May the 25th, Wednesday, FOMC day. Overnight we had the RBNZ, we had the interest rate decision. They did hike as expected. The consensus was a 50 basis point hike and they did. It's quite aggressive, and there's the Kiwi strength that we see. The large bubble indicates good performance, and there's the Kiwi there. So they shorted it going into this interest rate decision, and they're probably going to be caught off guard, I think. Risk off at the big picture and at the 24-hour change. However, the France 40 has skewed it. The retail guys at FXCM, they've gone really long on the France 40. So because we have to include France into the equation, that's kind of skewed our metric there. If we take out France, we'll probably risk on. Okay, so just bear that in mind. But we have to keep it in because it's a valid metric. You know, it's a strong indication for risk on or risk off. Ideally, we look just at US, but we have to count European bourses as well. So just bear that in mind. If we didn't have France, we could be risk on at the calculation. Okay, the Dow finished in green. I watched the close last night, and we actually just pipped above 10 points. NASDAQ and US 500 closed negative. NASDAQ was actually quite heavy. There's lots of bearish narrative because of Snapchat, and it's now below its IPO price. That's quite bearish, so that's impacted the tech sector, and we could maybe continue in free fall, so we have to be very, very careful. And there's the Kiwi strength, which I talked about. It's now strongest on the daily, so it's very interesting. The dollar has now beaten the CAD on the monthly basis. We are nearly closing out the month, and you see that the CAD bubble is over here, so it's indicating weakness in the CAD. Okay, so there's a potential scenario. If you're looking for a long-term swing trade, could be dollar CAD long, knowing that the dollar is stronger than the CAD, and it'll also be a sentimental play. But we have to be careful because we've got FOMC later. Okay, so maybe dollar CAD long could be good, potentially. And so they hiked by 50 basis points. That was a consensus, but didn't stop the rally. That's fine. There's the New Zealand dollar. There's the CAD, and S&P's made a buy. And so you want to keep an eye on that high, you want to keep an eye on that low. We're probably going to break out of this range, I think, and if they continue to short it, it'd be good for us because it will mean less volatility and less of a shakeout attempt. You see how prices ramping up and ramping down in order to shake people out. Once they've shaken them out of the casino and we go below 50%, it's going to be a hell of a lot easier to trade as well. Things will be a lot smoother, and that means that our signals will be better as well, because our signals have to take into account technical and sentiment, and if the technicals are just going out of bonk, then it's going to be difficult. That was my cat again. Gold's just made a sell. You can see the SSI line is close to the 21 moving average, so this could probably be falling, but we'd have to probably want to go a little bit long on that SSI line. If I look at it now, yeah, they're going long, so I can show you this actually. So this is so they go long against the 21 moving average, so price falls. Okay, it's dead simple. Double click that, so that's actually made a decent sell. Yeah, so it's 1856 now, so you can use this on any instrument. Just get the FXCM trading station, you might as well get it. It's amazing. Yeah, it's close and explains the sell buy signals that we've been getting in the signals group. We had load of fluctuation in our signals group of gold because of this. It's quite sideways, but it looks like they finally might be going long. If so, then we'll fall, and that'd be great. This was inverted yesterday, and it's now reverted back to normal. However, define normal, it's a bit of it's a hard one to call, but that was these two had interchanged, and now they're back to being in ascension there. So that could be a bit higher, that could be a bit lower, and we want this to track this line ideally. And this is a bit out of bonk, the 10-year. Yeah, got geopolitics issues, so that's the reason for these very high yields there. So this is a risk-off indication we've got high yields. So euro yen is out of whack completely, and is same with the dollar yen. Aussie and Kiwi are our best bets at 68% probability, which is quite poor really, because last week we were looking at 95% probability. That's quite weak. We could see some unwinding across yen and US 500, meaning that the US 500 could go one way and cross yen could just go the opposite way, because the correlation isn't exactly mega strong. So definitely don't look at euro yen if you want clues about risk on or risk off. And same with risk on. And strong versus weak tells us that euro Kiwi short is in play, because the euro yen is weakest and the Kiwi yen is strongest. So there's 54 pips above daily pivot, 22 pips below. We're seeing them getting paid quite a bit. You might have seen my video yesterday. What this is, it's calculated on the sentiment shifts against price. So what would normally happen is that when they go one particular way, they get punished. So they're currently getting rewarded on yen. They're getting paid on yen crosses. However, they're getting pretty destroyed on Aussie, and they're getting destroyed on Kiwi. So yen's was a bit of a payday overnight for retail traders, and that's why the failure rate is quite low. Should be a bit higher. We should be looking about 80%, because we know that 20% of retail traders are successful, and so they got paid quite a bit overnight, and we should see this increase as we go into FOMC. Yeah, so 88% failure rate yesterday, which I think could be the peak. So we'll have to keep an eye on that, see if it does increase. I'd be very, very surprised to see a 100% failure rate, but it might happen, so we'll keep an eye on that. Largest mover was pound yen towards buy. The largest stock loss cluster is euro yen, which is that big spike. It's huge above, by the way, 7% in size. There's a lot of liquidity in stops, 13674. And also note that Aussie USD is large above as well. So once we've taken these stops, then Aussie USD is going to be the largest stop loss cluster, which then will be like back to normal. Aussie is strongest and Kiwi is weakest. And no signals yesterday. We had gold fluctuate a lot, and CAD came through as a sell at 8 o'clock, but we closed the signals at 10, 11 o'clock. So there's not much point recording that signal. We could have done, but you know, it's 8 o'clock at night, and I'd started work at 6, so you know, I wanted them to come through a little bit earlier, but that's just the retail herd for you. They decided to go one particular way at that time, so that's why we got the signal. There's the calendar, so you know, all eyes on this, and I think you might see some dollar strength, and we have really oversold actually last week and a half, so we might be seeing a little bit of rally on the dollar as well. So what happens to risk, we don't know. Normally when the dollar strengthens, we should see a bit of risk off, but we're seeing that break down on this correlation, mostly to do with the euro strength, because the ECB were quite hawkish. So that's that. So yeah, hopefully it was helpful, and I'll wrap up now, and let me know if you need any help at all, because I'm here for you as well. So this is probably likely going to change. If we get a strong dollar after the FOMC, this could possibly go red, but you know, we've seen a breakdown of correlation between the dollar and risk, so we'll have to wait and see what happens. So trade safely, and I'll be back tomorrow, and eventually these will come down once these retail guys have got squished. Once they're out the casino, we'll see an impact in the yields, and they won't spike as much, and it will just prove that sentiment is like the king. So yeah, I'll speak to you guys tomorrow, and have a good day and trade safely.